Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 28 of the Forex market review. We're going to quickly jump to the charts and see what's happening. So today's video is going to be a pretty quick video. We're just going to look through two pairs just to see where they're traveling. The first pair we're going to be looking at is the Aussie USD. Now we can jump out to the weekly time frame if you would like, and we'll just have a quick look at the charts and see where we're going. As we can see, it's pulled down, it's bounced off this 200 EMA line, pushed back higher, but then pushed straight back down. There's a nice solid candle pushing straight back below that. So therefore it's definitely on its wave down, and if it does come back, it could retest that area before it bounces back lower. And then so that's an area of resistance we want to be looking at in the future. Dropping down to a lower time frame, the daily time frame, we can see this large AO, so we know that this one's likely wave 3. So this is probably wave 1, up for wave 2, down for wave 3. I'll go ahead and drop those numbers in for you just so you can see. So that's the start of 1 coming down to the bottom of 1, which is then the start of wave 2, pushing back higher, and then it ends wave 2 with a start of wave 3. Now obviously normally in a wave 1 cycle, the wave 2 pullback comes roughly, we like to see it come back to about 61.8, but it can come all the way back up to the 100% level. Now the 100% level is right there. That's where wave 1 started. So because it didn't break that, it is still considered as wave 2. If it had closed above wave 1 up in this area, then this wave cycle would have been cancelled. So that's the wave 2 pullback. Now we're looking at the wave 3 pullback. So again, use a Fibonacci retracement tool. We want to see it pull back to roughly at least the 38.2%. I like to see it around the 50% level. We want to zoom out, look left, and see some horizontal resistance areas. So, you know, if we were just to drop a couple of lines in roughly around here, we're going to see it's bounced a few times around this area, and that also lines up with roughly the 50% mark, and then again bounced around these areas a few times, and that's at 38.2. So here I have the Dsr indicator. That's that green box there, and that's the Dsr indicator as well. So this was a support area which broke straight through, so when it comes back it could retest it. So it's very likely it could find some support between these two bands if you're looking for a pullback. We currently see the stochastic oversold, and so what we want to do now is drop down to a lower time frame just to see if we've seen the 5-wave movement on a lower time frame. So if I drop that down, we can roughly see this movement down here, and we have what appears to be 1, 2, 3. Now because 3 hasn't come back to zero line until right now, it's very likely that this movement, all this movement here, is wave 3 on the 4-hour chart. So if that is the case, then we're probably going to see a push back higher for wave 4 and maybe one more move back lower for wave 5. However, if it does pull back up into the 38.2 resistance area, that will be the daily wave 4 pullback as well. It's all because of how the Brexit and the markets have been operating. It's very likely it try to come back, and it quite possibly, if it pushed a little bit higher, we could have seen this is 3, back for 4, down for 5. But at this stage, we just got to count all of this as wave 3 because we use the zero line as the area where we expect it to come back. So it's either way, whether or not it's a 3 back for 4 on the 4-hour or 3 back for 4 on the daily chart, it's very likely that we're going to be pushing back higher on this trade. So while we're looking to see how far this will pull back, we probably want to see an ABC type pattern, because wave 2s and 4s generally do an ABC where A equals C. So you probably could be seeing something like that. So generally this A movement is similar to this C movement, and we'd like to see a zigzag move back higher and hopefully some divergence. If I drop down to a 1 hour chart, what we can see is divergence, so it's very likely that where we think the trade is ending, it probably is ending. And there's your divergence where it's come back to zero line and done another higher AO but a lower price. So as people are selling it more, roughly less people want to be purchasing it. So that's some weakness in the market. So we just want to see what happens with this trade and where it may go. And the other one I want to show you is the New Zealand USD. We can jump out, start on the weekly time frame again. We see this large movement here, which we think is wave 3. So this is 3, back for 4. We've seen a zigzag movement. Obviously A is not equal to C, but that's just roughly what happens. We look for horizontal support and resistance areas. If we zoom out a bit, we probably see it's bouncing a few times there. So it's very likely we could be finding resistance around these areas on the weekly chart. It's also got this 200 EMA. So it could bounce off that and want to push back lower, and the stochastic is being overbought. Dropping down to the daily chart, we can see a pushback up, down and higher. We don't have divergence on the daily chart, so we could see a pullback and for another little pushback higher. So that's something to take note of. Dropping down to the 4 hour chart, we are seeing a divergence here. We have the higher high in price with a lower AO. Now it is stepping down as it steps up. Obviously it's not as significant if it was like on that incline, but it's still higher in price with a lower AO. So it's something to remember there. Dropping down to the 1 hour chart, we definitely have divergence on the 1 hour chart. Here we can see it's a lot more steeper, but we have lower low in the AO with a higher high in price. So that's a good sign that it's very likely we could be turning for a downwards movement down there. What I would be looking for is a possible pushback down, maybe even a retest of that support resistance areas before a final pushback lower. Looking left, I'd be using this 200 EMA line and these support and resistance areas. So the dynamic support and resistance indicator shows that for you. You can purchase that from our website if you choose. Otherwise, you just look left to see where it's bounced a few times. So if you were looking at getting in this trade, it had a bit of a pushback to the resistance. You could be looking at risking, run at 150 to 200 pips to try to get 270, 280 pips. So obviously the lower your stop loss is, the more you can make, and you have to make at least 1-to-1, but you got to always try to make more. That way you don't have to win as often as you lose, and you can still make money. So that's the New Zealand USD. We're looking for it to push back, have a bit of a retest. It may not come that low, might have to see something similar like that. Push down with a bit of pushback and then back low again. But that's the type of trade setup we're going to be looking for. So thank you for that. That was week 28 of the Forex market review. Again, if you want to have a look at our website, www.saneinvestmentsolutions.com, you can click on the free training section, and that will take you to some free training videos by affiliated partner. And you can go through and find out how to do the 2618 trade, learn a bit about into the grey and things like that. And if you wish to progress further with your training, then by all means take a look at the training course. Courses on there, and as you can see, the dynamic support and resistance indicator is at horizontal support lines that are automatically drawn into you by the computer. And there's a lot of other great packages that they have on our training courses. So I wish you all the best in your success. Take care. Bye-bye.